Happy Friday, traders. Whew, Friday afternoon. This video was brought to you by Celsius. No, just joking. It's the only way I'm getting through the week. What a week. Holy cow. I'm beat. Traded the hell out of this market this week. Sorry, I've been doing a free video. Again, my focus is on the markets and research customers and clients of the wealth management. That's just where we're at. So I just want to take you through where we are. I mean, I think an historic week. S&P through 5,000. Markets are going parabolic. Now, let's sort of assign some boundaries to this market. Let's not get crazy. Let's not be too quick to take profits. I was just tweeting that, in a market like this, when you smell blood in the street, you have to have the courage to take massive profits and go for the throat. Now, there's always a chance that the market reverses on you and you give some or all of the profits back, but at least you're in the position to get after it. So I kind of want to show you the position I'm in NVDA. It's a large holding in my wealth management business at Inside Edge Capital. It's a holding in both the dividend and the growth portfolios for our clients, because it is a dividend-paying stock, which is crazy, along with Meta now. So I'll show you my personal position. I'll give you a little bit of background on where the market is right now, and just kind of talk to you casually. And again, my head is spinning after this week, man. What a week. And also I'll show you something that is of concern right now in this market, and we'll get into it. Okay, so here we go. Let's look at the Nasdaq. Now, a lot of people are saying, "Oh, bubble. How much further can this thing run? It's out of control." All right. Well, let's look at this objectively. So let's just go to the weekly. And I did a Benzinga interview this morning with my friends Dennis and Joel, who are awesome. And if you look at the Nasdaq 100 weekly, on first blush, I would say, yeah. Excuse me. We have some daylight between the price of the Nasdaq and the 200-week moving average. You might say, yeah, it's a little overbought. We should probably pull back. All right, well, if you look at the indicator down here that measures the spread between the 200-week and price, right now it's at 31%. And if we look at history, is that overbought? I think you see where I'm going with this. The answer is no. All right, so from the 200-week moving average, we have precedent back in 20 and 21. We were hanging out at 65% above the 200-day. Back here in 18 and 19, just before COVID, when the Nasdaq was breaking out, just leading into COVID, look over on that right scale, we were 45% above. And then back here in 13, 14, back in 12, we were rolling 45% above the 200-week moving average. So 31, we're not overbought. We're not. The 50-week, however, is a little overbought. All right, so the 50-week is this really small dotted gray guy right there, if you can see it. We're rolling at 17.8%, and I'm watching NVIDIA. I got a ton of options over here. I'll show them to you. So we're rolling 17.8% above the 50-week moving average, and we've been as high even in July as 23%. We've been 27%. We've been 31%. And then you have a series of highs here ranging from 20 to 25 to 29%. So it's overbought, but it's not as excessive, right? And maybe the answer is, do we need a significant pullback? Maybe. And for me, this is what I've been thinking about all week is, I don't want to miss the next 10 to 15% move, because with such an explosive market like this, I think we're either going to ramp as we get through S&P 5,000 and people who've missed this and realize that your 5% CDs, your real yield with inflation is like 2, and then you got to pay tax on that, and oh man, I should have put my money in the market. I think those people are going to come in the market, and we could significantly ramp. On the other hand, the market is going through realization that we're not going to get 5 or 6 rate cuts from the Fed this year, and markets may still think we're coming into recession, and that's a reason for people to not buy stocks or sell stocks. So I don't want to miss the next 10 to 15%. I've been so focused on that. And maybe the answer is right here in the chart. And the answer that I'm referring to is maybe being that the 50-week moving average is approaching overbought status, maybe the market needs to consolidate. Maybe we need time for price to go sideways, which if price goes sideways, don't forget, each week the moving average is going to move higher because it's higher than the moving average. So as price goes sideways, maybe the moving average catches up and that would drop this indicator lower. And that maybe is the answer. It's not 10% higher or lower. Maybe it's just sideways. Maybe that's the greatest pain trade, right? So just food for thought. Okay. So I wanted to bring that to your attention. The other thing I want to talk about on the Nasdaq is let's talk about this. Okay. Are we in a bubble? Has the market come too far too fast? Are we in a massive breakout bull market? All right. Well, let me ask you. When did the bull market begin? And this is I've seen this debate so many times, like it's annoying, but when did the bull market begin? It's easy for people to say, well, October, November, December 22, first whatever month or two of 23. Well, okay, the bull market started there. If I'm not crazy, I remember telling people on Twitter and getting long in the market, talking to my investors at the Wealth Management and say, we're going to buy stocks here. For these technical and fundamental reasons, and people thought it was crazy. People were telling me, I'm wrong, we're going to collapse, we're going into recession, sell all your stocks. Like, that doesn't sound like a bull market. That sounds like an extremely oversold market with a high degree of pessimism that shorts began to cover, new money started to come in. I would say the bull market begins when you start breaking out. So, is the bull market, 14 months old? From, actually more than that, October 22, whatever that is, October to October, boy, I can't even do that. 16 months, call it. Been a long week. I would say that, a bull market begins when you take out the old highs, but that's semantics. The point that I'm making here is, okay, even if you argue with me, and I don't have the energy until I have another Celsius, that the bull market began here. Okay, how far have we run? 68%. All right, that's a big move, right? All right, well, let's look at the Nasdaq on this time frame. All right, the Nasdaq post 2000 ran at the lows to the highs heading into the GFC, 181%. From the GFC lows up to the most recent high in 21, ran 1,545%. 181, 1,545, and 68. Like, that's it? I don't think, it's not how markets work. It's not how markets work. Okay, and if you think the market looks overbought, here's a really complicated trick. This is something that took me a long time to learn as a professional trader, and it's something I'm sharing with you that I don't want you to tell anyone else, and just keep it between you and I. When a market looks very overbought on the chart like this, here's the secret. Here's what you do. You grab your vertical axis and you just pull it down, and now you have more room to go up. Sorry, I had to do that to you. It's kind of true, though. It's kind of true. All right. So let's go to, let's just take a look at NVIDIA. Yeah, it's crazy for sure. And, I have positions on, I'll talk to you about them. I'll show you how I may protect them. I have stock on here. I've got stock that I've held. I've got a bunch of options, sitting on, over $100,000 in gains here. And I'll show you where we are, and I'll show you, I may protect, and I'll show you where, as I'm being so sarcastically bullish here. So, okay, here's where we are in NVIDIA from the wave count point of view. Here's what I'm thinking is happening. It's pretty simple. From an Elliott wave point of view, I'm thinking from the 22 lows, it's this. And it's just a simple 5-wave move up with a triangle. Now, here's the problem. We are inside of resistance. And I haven't watched the market this closely since I was a professional prop day trader during 2001, 2, and 3 Nasdaq collapse, and during 2007, 8, and 9 GFC collapse. I was super active trader and much younger than I am now. I haven't watched the market this close. So I am riding NVIDIA as long as I can, trying to have the courage to take as many profits as I can, but we do have resistance from 711 to 878. Okay, so the implications for this, should this resistance zone hold, which I don't know how it's not going to, is for that, at least. So as much as I love the story, as much as I think we're in, this innovation, this AI boom, just the implications of what's happening, like the footage of what Vision Pro is out of Apple. Like, it's crazy how quickly people dismissed it and how stupid it is. And now the reviews on social is amazing. Like, I remember, guys, it took me like 2 years to put these stupid things in my ears because I thought they looked so stupid. Well, I'll tell you what, I don't care. I just had my 45th birthday, so I don't care what I look like anyway. But I can't be without them. Like, I just can't. I live with them. So I think it's going to be the same thing. And then the format that, the blocks that you're wearing in your face are going to change and the price point comes down. But it's going to change the way that we interact socially, professionally, personally, et cetera. So we're going into the new age, AR, VR, artificial intelligence. This is the reason we've seen so much premium and strength in the semiconductors. The market was pricing this in. I've been saying it for years, and now we're starting to see it. Okay, but we do have this on the way back. Okay, now here's the other problem. And I told you, I don't have a point. I'm just rapid firing everything that, I think we're seeing here. Okay, here's the problem within tech. These are the industries that are leading technology: semiconductors, semiconductor material equipment, system software, application software, hardware storage, tech, hardware storage, and distributors. All right, so the rotation up to the right means outperformance relative to the benchmark. And what you're going to see is semiconductors here in green made a big move. And this is pretty much the first week of this year. Boom. Semis make the big move, and what happened? Application software, system software, distributors, tech hardware, Apple's in tech hardware over here. All of those guys rotated out. So, and we're continuing to see it. I mean, you're talking really important stocks like Salesforce, like ServiceNow, Cadence, Synopsys, Manhattan, Associates, like, very big, important software companies that did really well at the end of 23. Look at the big move in system software right here. And application software does a hook. Like, those guys were ripping right there as semis were kind of taking a back seat. Well, now what's happening is software and everything else is rotated where semis are taking the lead. So we really need software. Like, take a look at Adobe on the breakout. We need Adobe to join, else semiconductors are doing all the heavy lifting right now in technology. And we know what's up with Apple. Like, Apple's just range bound. Apple's trading like a consumer staple stock now. And I love the future of Apple, but now, until they go through this shift, this first real technology that they've introduced in a long time, it's going to take a while. So that's my concern. Okay. Now, what I'm thinking about here, and I'm watching this, I'm watching 5-minute charts like I used to be a day trader. I'm watching S&P futures, Nasdaq, I'm watching gold, I'm watching euro dollar, watching bonds, and I'm just kind of watching NVIDIA into that resistance zone, right? So, as I said, I have profits not only in NVIDIA, but I've been holding XLK and Meta and AMD, so whatever. I'm up, I don't know, in this account, it's a $350,000 account. I'm trading up $100,000 this year, so it's fine. I want to protect the NVIDIA, and I will also look at XLK, Meta, and AMD, which is fine. But here's what I want to do in NVIDIA. So what I'm thinking about doing is collaring it off. Okay, so we're trading 720-ish, 719.70. The resistance zone in NVIDIA is 711 up to 878. I have some shorter term. I'll save it just for brevity in this video, in the shorter term into the 740s. So, I like to protect the 100 grand in profit I have on it. So what we could do is sell 2 of the 740 calls and buy 2 of the 675 puts. So it would be selling 740 calls, which is going to bring in $81, and then taking the $81 in credit and buying, some puts down here, 54s or 675s for $54. So we take in $30, right? And the idea there is, okay, so if I sold the 640s, bought the 675s, I'd take in $27. I would be capped out at 740 in profit, which is fine because that's my upside zone. And then, my losses would be contained below 670. And the idea is if this is truly a 5-wave move up into this zone, 640 is not going to be a problem. And I will be concerned about this. I don't think this is going to happen. I don't. But I'm willing to forego, the upside to protect against this, which this is the most simple, basic Elliott wave pattern there is. I don't know how the market's going to get out of it. And this is the same in Amazon. Look at the 5-wave move in Amazon here. It's so simple and basic. Look at the 5-wave move in Microsoft. It's so simple and basic. You see it in green? I don't know how the market is not going to get out of this very simple 5-wave move that Charles Dow gave to us, who's the grandfather of technical analysis, where he shows the market moves in 3 primary trend waves, which is, accumulation, widespread participation, and then distribution. That's the basic model. Ralph Nelson Elliott picked it up and ran with it. I don't know how the market is going to get out of this sort of conundrum we're in. We are in a position where the Fed is now out of the way. I think the market's realizing we're not going to get 5-6 cuts, even though Fed fund futures are still pricing it in. We have a tech innovation that is the same as like electricity coming along. I think it's like the very beginning stages of the internet. The geopolitical situation, though it continues to be terrible, is under control. Borrowing Iran getting involved. Again, we have clarity on Fed policy. Earnings have been great. And there's still a lot of people who think we're heading into recession. I mean, we just did a report, 67% respondents to the recent surveys think we're still going into recession. That just means money's on the sidelines. We had new high in money markets, $6 trillion in money markets on the sidelines. And people who realize they're making 5%, real yield is, take away 3%, inflation is 2%, then you pay tax on that. Well, that sucks. So, I think the money does want to come back into this market, but how do we square up with this simple 5-wave move? That's the conundrum we're in right now. If I'm wrong and the simple 5-wave move does not reverse the market, I'll take my protection off in XLK, AMD, NVIDIA, XLK, and I think I already said it, and right the ship. Now, I also, I just rebalanced the portfolios on the wealth management side, and we're staying aggressive, and I just did it last week. But if we start to show signs that we're gonna drop, I'm gonna take measures to attempt to protect. So incredibly interesting. I tell you, there's a lot more questions than answers, but anybody who tells you they know exactly where the market is going and here's what you got to do, yeah, right. That's not the way it works. So you have to have my mind wide open, accept multiple possibilities, always look left and right over your shoulder, have a plan, but always have backup, have a contingency, and figure out what you're going to do. And I'm watching market sell off here a little bit. I think I was trying to day trade a few options into the close here. Let's see, what are we doing? I don't know why I'm showing everything. I don't know how to show you guys all my account details. Might as well give you my social security number and all right, what's that one? Oh yeah. I took off a 710 short call. we rolled a call trade up. We had 700, 710. I bought the 710s, sold the 740s with our research client. So that's what that is. So yeah, market's selling off here a little bit. And I'll tell you what, if those of you who are super short-term day traders, it's kind of the old days, but for the market to go up, you want to see gold go up, you want to see bonds go up, and you want to see Euro USD go up. That means dollars weakening, bonds go up, yields go down. It's going to push the dollar down, which is going to push gold up, which was what pushes stocks up. So for trading, you want to see Euro USD and gold go up. That's going to help stocks. Looks like gold's dropping, dollar's dropping, and that's why you're seeing stocks sell up. So I have a little scalp in here in NVIDIA, a little day trade there. These little guys, I was up $1,500 in the start of this video. Now I'm down 127, so I'm going to sell those. 95. I'm just trying to press into the close. We still got 45 minutes, so anyway, lots going on here. Hope that helps. I don't know really what the point of that was, but that's just kind of the market we're in right now. So good luck. Super fun in here. See you guys.